on that recently, I mean, it's 2 years ago. Then there's the question of risk-based capital and solvency for Takaful companies. Obviously, a very basic, important question for all insurance companies, as well regulated by Bank Negara, as well dealt with by IFSB. And when I say industry groups here, we could find, of course, several circles. Sheikh Bilal will take up a lot of those issues tomorrow afternoon in his workshop. And I don't want to be hypocritical and to hide from you that at least one of those industry groups and so those issues were launched with very, very direct support from Munich Re and from me personally. Discussed with IOFI, the standardization organization, and of course among the industry for quite a long time already. Accounting, the treatment of the Kard Hassan, of the deficit, is something discussed everywhere, because it is, whenever you talk to conventional people about that card, and then whenever you talk to regulators and to rating agencies, what about that card? What is its economic reason, rationale, and how has it to be treated and to be accounted for, is to some extent the last test of how the system works. Who is protected more? What tier of capital is behind that card? Who belongs it to? Is it a liability? And so on. Then the Sharia compliance and differentiation is the issue of this morning. What does it consist in? This is discussed by nearly everyone, except perhaps IOFI at the moment. Then the basic question of risk sharing and risk transfer, which is always raised and often named as the basic difference between conventional and Takaful. And you may sense from the way I tell it that I'm of a different opinion. And then only one column, but very important and decisive actually, are the managerial issues. That mean the issues of running successful business apart from the model and the setup. Doing the day-to-day work, finding the right markets, the right marketing, the right products, the right cost and expense structure, the right legal structure, and in a word, the managerial thing, and the market access strategy, that it to some extent corresponds to the idea in the basic, essentially, intention that the uninsured Muslim masses should be approached and unlocked. So we go again, now look at these points which are on the discussion table of the industry: corporate governance, risk-based capital, pricing, accounting, Sharia compliance, the risk transfer issue, so the self-understanding of the industry, and the managerial economic issues, and group it. Because they are of course not independent of each other, and some are more dependent of each other than others. You have the corporate governance, this is one group. Risk-based capital is another group, while pricing and surplus distribution is directly connected to solvency, because it's just the other way of having a deficit is having a surplus. And the accounting is connected to it because the Kard Hassan is exactly the deficit we were talking about on whose balance sheet it stands. While Sharia compliance, Sharia-based, Sharia-compliant, we discussed this morning, is again linked to the corporate governance issue directly. Risk transfer, risk sharing is in fact some effect of the pricing issues. What is actually happening? Is the risk staying in the community or is it transferred? And then the third group, the third color here, are the managerial issues. So we group that. The governance and differentiation issue. So our question of this morning: do we think conventional or do we act conventional and think Takaful? Then the technical risk sharing, risk transfer issue, with the deficit, and then the managerial points. These three should have an impact on the strategy, on the overarching target, which means increasing the market penetration by differentiation of the profiles, of the profile of the Takaful offer as compared to conventional, to convince people to come over to Takaful or take out a policy for the first time in their life. And differentiation of market approaches with different business plans, different business models. This is what we go for, to put it in place, to make it reality. Now, if you see these three clusters, the governance and Sharia compliance issue, the pricing issue, and the economic managerial issues, and go through it and see, do they address the right questions, the risk, go through that, because I think this is a turning point of the analysis of what is important and what is perhaps overestimated in its strategic importance. The risk-sharing, risk-transfer issue is from me now. Meanwhile, I had been of another opinion some years ago, a clear no. I tried to explain it this morning very briefly. We came out with this Wakala risk-sharing approach and with a pooling approach, and found out whenever we were to pin it down to a treaty according to the needs and the demands of the clients, it was in the end a sort of reinsurance treaty. Not necessarily a copy of the existing, we took pride in that, but it was reinsurance in the end and not anything completely different from that. So risk sharing and risk transfer is, I think, a wrong category, because all conventional companies do risk sharing. They want, in the long run, to the clients to pay their claims themselves. Otherwise, they will go bankrupt. If the insurance company does collect less premiums than they have claims in the long run, they go bankrupt. And the risk sharing is that the clients pay more premium than pay the claims among themselves. Therefore, that is not a category. And this is important because it is often held that risk sharing makes the difference. I couldn't find it on the technical level. And the differentiation or integration, so keeping a distance or cooperating with the conventional system, is important, as it's my opinion this morning, for investment and the halal screening. So the avoidance of haram risks, and for the riba-free investment. That's important, that's convincing, that's established. For the insurance techniques, regarding the risk sharing, no, if you have some special groups that stay among each other, work on like a PI club, that can work. It's also not very new. It exists in the conventional world, just not with that background. So mainly there is not such a difference in that, and we should not artificially construct differences where they don't exist, because that does not lead us to a clear analysis. The managerial issues, the service quality, the market strategy, the penetration, the thing of making it work on the economic level is definitely important, because the best theoretical and Sharia compliant system does not help you if your shareholders are disappointed after 3 years' time. You have to make it work, and you have to convince the markets not only by calling it Sharia compliance, but by giving the best offer in the market, the best service quality. And this is, of course, a level you compete with conventional on it, because they also have a service level, of course. So I think in the long run, if Takaful companies would rely, and they don't do, I know they are all aware of that, would rely on being Sharia compliant alone, they would just spoil the label of Sharia compliant. They should, in turn, be, to the contrary, consider themselves a premium provider. So, having sorted especially the risk transfer out, and we started this discussion some time ago, you end up with with a new sort of discussion, and I could feel that especially last year, when I met, for example, or got in contact with a group from Lebanon who tried to build up a Takaful operator of a new style without a shareholders fund, and they got their license because important and rich, of course, people of the community gave a guarantee. Pure kafala means a really charge-free guarantee for possible losses without putting money in. This is, of course, not commercial. This is social. This is benevolent. And this is really something new, because an insurance company is a commercial enterprise. Then I also got some texts from Sharia scholars who say, okay, the real mutual thing means it is less profit-orientated. We have to accept that risk sharing, risk transfer is not a category. But if it's not that profit-orientated or really mutual without that hybrid system, then it's new, actually. And then it can work on another basis. So this is one of the axes I wanted to define the axis between commercial, cooperative, and social. While cooperative means ta'awuni is in the middle of both. And the other axis is simply the amount and the structure and the volatility of the business, personal, retail, commercial, or industrial. These are the things that, in my opinion, underlying and where the Takaful companies or the Islamic insurance solutions have to position themselves. If we find a strategic roadmap, and that is the purpose of this presentation. So what you see here is a quadrant system. I tried to build up out of that, with the vertical axis being the economic orientation or the profit orientation, from commercial means profit orientated over cooperative to social and benevolent. And the other is the structure of the business, from personal lines, I mean life, health, to general retail lines, commercial lines, and industrial lines, including energy and so on. I have made more differentiations here. You see that in the legenda. There is a sort where the risk is mainly carried by the shareholders fund. That means the more volatile business. There's a sort where the risk can be contained within the participants fund because it's less volatile mainly, or more mature. Blue means that is something known in conventional, or you may say like conventional, and green are new solutions that came out of this drive to produce something Sharia compliant, which has not been there before. So where are the different Takaful types situated here? This is conventional, what we found, conventional retail business and personal lines. And there is a replacement for that, and many Takaful companies are doing that at the moment. For example, in motor business and life and health, family Takaful. They are replacing, they're an alternative to the existing retail lines. And since it's not very volatile, they can, to a large extent, do it with the participants fund, therefore the form. They try, of course, to go into that, to grow that cake and also to take parts of the conventional cake, replacing it. This is their place in the quadrant system. And there is the conventional project business, the very large business, the CAR business and so on. That is in a hexagonal form because of the volatility, and it needs a shareholder fund or enough reinsurance behind it.